Well, the latest market volatility is leading some traders back to basics.
Here to tell investors what all the fuss about stuff is about, James Courtier, president of Liberty Trading Group and author of The Complete Guide to Option Selling, along with Monty Gill, chief investment officer of Guild Investment Management. Welcome to you both. Monty, I will begin with you. We're looking at a volatile time for commodities. Obviously, oil is way off its highs, but it's ticking back up today. You know, we're looking at all kinds of action depending on the day. So how do you safely, if there is such a thing, invest in commodities?
Well, we believe you have to stick with the commodities which have good fundamentals based upon shortage and supply and demand issues, as well as those which will benefit from a weakening dollar. We see the U.S. dollar weakening. So we like oil and gold specifically in that context.
Well, James, you're prescient. You said yesterday that the current prices were not justified when it was going up again. Today, it's down substantially. I don't know if we can put the oil chart up, but about $67.50, a 4% drop. Do you consider it to be dropping further from here?
Actually, we do. We think that prices have met a crescendo here recently on this run-up in oil. We were at $72 and $73 recently. Gold and silver were rallying to levels we haven't seen in quite some time. We don't feel the current landscape right now is conducive to high commodity prices. Oil specifically, oil supplies are at 20-year highs in the United States. Heating oil supplies are at 25-year highs. And September, October, November is the low demand season. So we're probably still heading lower in our belief.
But of course, commodity land is very broad, very widespread. Let's talk about some of the soft commodities. Obviously, sugar has been skyrocketing lately. I believe it was pulling back in the interim, but sugar, soy, all the foodstuffs. Plus, you know, you look at things like copper. Let's go to the base metals. Copper has been skyrocketing as well on China demand. You don't see any opportunities there?
We think that copper as well, which really is putting on a great show right now, has really been elevating towards $3 a pound recently. Really speaks to the fact that people do believe that the Chinese story is real and that the demand there is actually more than just... We think it's extremely overbought right now. Copper is probably going to come down to 30 to 40 cents here as the stock market cools off. We think that we've exceeded fair value on many commodities, and copper would probably be included.
All right, Monty, my favorite commodity of all time has got to be cocoa. I love chocolate, and so do the Chinese, and so do the Indians. And frankly, there are a lot of chocoholics here in the United States as well who are going to give up a lot of things, but not their chocolate. Is that a commodity that will continue to rise?
Thin market, very difficult to analyze based upon supplies coming out of Africa often, and this makes it very difficult to analyze. But longer term, yes. We're not short term like James. We're more long term focused. So although we agree with him about oil, gold, and copper in the short run, we think in the long run they all go higher.
Okay, so how do you play some of these, Monty? I mean, give investors some real ideas on what to do and how to make the money in it.
Well, Liz, in terms of oil, we think you just go with the big majors in the United States, especially those which are not so focused on gas. We would focus on Chevron specifically among the big majors in the U.S. There are also within Europe many international oils like Bankers Petroleum, which trades up in Canada and which is a very focused in Eastern Europe. They have big discovery there. So there are many ways to play it without playing the commodity itself.
All right, we got to wrap it, James. I just got to hit you on cocoa as well, because you're a big chocolate fan too, right?
Yes, we do participate in the cocoa market. We don't look at all commodities with a broad stroke completely. We dissect the commodities individually. Demand for cocoa is up some 40% with the liking of dark chocolate here in the United States. The health benefits of eating dark chocolate are very well known, and we're bullish cocoa.
And you got the new middle class in China and India.
Exactly. Cocoa's probably headed to $3,200 to $3,300 a ton sometime next year.
Yeah, that's our favorite commodity here.
We love it. We love it. James, Monty, thank you very much, guys.
Thank you
Great
both
to see
very much. You know, you watch out for those prices because James makes the point. Watch out, copper has been skyrocketing. Remember rice?
Yeah.
A year ago?
And each commodity is different. You got to evaluate each one based on demand. Thank you, guys.